Welcome friends. In this session, we will be looking at a concept called producer companies. Producer companies. What is this producer companies about? What is this relevance to the Companies Act? What is this relevance as finance professional to us? Will be forming part of my preamble here. Well, looking at the concept of producer companies, it is not as old as the Companies Act 1956, but it's a new entrant. The Government of India has been quietly watching for some time the success of the cooperative societies in India. The cooperative societies has been doing a splendid job in improving the economic condition of this country. The cooperative society has spread across India in such a manner that it is working in a setup which is similar to the corporate setup. So, the Government of India wanted to corporatize the cooperative societies so that the administration and other aspects that is prevailing under the cooperative society can still be brought under a good professional setup. This was the basic idea that was running behind the mind of the Government of India before it was trying to bring this concept. As a result of this, the Government of India constituted a high-powered committee on 1st November 1999 to make a study about this and then submit a report to them on aspects including how the cooperative societies can be corporatized so that they can take the benefits of a corporate. Because having spread into the rural areas in a very good manner, it is time that these cooperative societies are getting corporatized so that they can reap the benefits of a corporate professional setup, because the money they are making to the economy, to contribute to the economy to the higher level is just splendid. With this in backdrop, the high-powered committee was constituted under the chairmanship of Dr. Y.K. Alag, who was heading this committee. As I said, it is constituted on 1st November 1999. Now, this committee later on, after a good discussion, submitted its report on 15th March 2000. So, within a short span of time, the committee was able to do a good job. Now, the committee's recommendation was taken by the government and had been suitably added to the Companies Amendment Act 2002. So, Companies Amendment Act 2002. Okay. This Companies Amendment Act 2002, we all know that it came into force from 2003, which is, if it has to be talked about exactly, it is 6th February of 2003. So, the concept of producer companies goes like this. A high-powered committee was appointed to study how cooperative societies can be corporatized. As a result of this, how the benefits of corporate can be reached to the cooperative societies. So, a high-powered committee appointed on 1st November 1999 submitted its report on 2000 March. So, that has been taken and suitably included in the Companies Amendment Act 2002 as a part called 9. In this part, you will have all the aspects of this. It will be more specific if I am writing it here for you to understand. It is part 9A. Part 9A. For people who are getting confused, it will be like this, part 9A, for our easy understanding. So, this is how it is. This part 9A, which has been included in the Companies Amendment Act 2002, will have all the provisions relating to producer companies right from the beginning of definitions till reconversion of a producer company into a cooperative society once again. So, the chapter heading is divided from 1 to 12, which will have all the aspects on this. So, this is the preamble part as far as producer company is concerned. Cooperative society, it's high time they take the benefits of corporates. So, a committee was appointed, they gave their report that has been suitably included in the Companies Amendment Act 2002, which came into force from 2003. In that, if you look at the preliminary portion, you look at its part 9A, which has the concept relating to producer companies. It has chapters from 1 to 12, starting from definitions part till reconversion. So, this is on the initial or the preamble part of this. Now let us look at why is this we are going for this concept, what is the advantage, how to go about it, all those things. First, as I said, it's high time the cooperative societies take the benefits of a corporate. It's high time they function as a corporate because they are well spread in rural areas. They have a lot of potential of becoming a corporate. In that case, under a professional setup, they will be able to deliver more to the society than what they have been doing at present. With this idea, the producer company concept have been inducted. Now let us look at what are the provisions relating to this and what are the preliminary aspects on this. One, you need to know that overriding effect. Overriding. This is not any new concept. This you have studied in income tax and other things, which goes to say that whenever something new comes into force, the law which brings that says, notwithstanding anything contained contrary to any other enactment, and notwithstanding any other law for the time being in force, enacted before or after, henceforth, this act shall have an overriding effect. So this is the overriding effect. If any other enactments which has been enacted earlier is standing as a contrary to this, this act will have an overriding effect on this. So it will overrule any other aspects, any other law which has been enacted herein before. So this law has an overriding effect. So you need to understand, because sometimes you may have a doubt, studying this portion of that law, I find this is contradicting this one, whether this one prevails or that one prevails. Very clear, this states it has an overriding effect, notwithstanding anything contained herein or any other law enacted herein before, this act and its provision will have an overriding effect. So first point you need to know is it has an overriding effect. So it's clear that no other persons can come and dispute with this, with any other provisions of this. Now coming to the next concept. There is a clear talk that producer companies is closely in line with private limited companies. I will repeat. There is a feel in this enactment that the producer company is in line with a private limited company. Answer is an affirmative. Yes. To some extent, a producer company will have all the benefits which will have or which will be enjoyed by a private limited company. How is that? We will see. I will tell you how it goes one by one. But you need to here understand the concept that all private limited companies are not producer companies again, as what we normally say. A producer company will have the benefits and will be treated to some extent at par with a private limited company. Our understanding ends therewith and no vice versa comparison. Okay. So understand that the producer company will have the benefits which will be equal to a private limited company. Now immediately the provision next starts. Can we compare the producer company with a private limited company and see to what all extent they are matching with each other, to what all extent they are differing with each other? How does that go? To some extent, there are some similarities and there are some differences. Of course, similarities are less, but the differences are more. First, let us tell you about what will be the initial case of small matching of concepts between a producer company and a private company. It goes like this. Normally, we used to say that a private limited company, 313 of the Companies Act, anybody will be able to recall, restrict the right to transfer the shares, limits the number of members to 50, prohibits any invitation to the public. Okay, all these points, anybody is clear about it. Now anybody will have a doubt, does this producer company also has a similar kind of concepts and relatives? No. Producer company doesn't have that kind of restrictions in the definitions part. But what is a producer company? I will tell you when we come to the definition, because it is just like a company defined under the Companies Act earlier. Company means a company registered under the Companies Act 1956. So it doesn't give a new or unique meaning to that word producer company. So when we come over there, I will try to explain you. Now let us try to look at very clearly how the provisions of a producer company versus that of a private company, what are the differences that prevail between them. So let us go one by one, step by step for you to understand. So let us have a columnary form, producer company, private company. Let us have a pictorial representation to understand how the differences are prevailing. I believe that will help you to understand much easier the concepts, whatever I have with me. So the first difference which I could put up is one, incorporation. Incorporation. Okay. What is the general differences between a producer company and a private company on incorporation? Everybody know this one, everybody know. So let us first fill up whatever we know. It says two or more individuals or company, two or more individuals / company. Let us take the wider meaning of person. So individual, two or more individual company. Whereas incorporation of a producer company will be 10 or more. It will be 10 or more individuals or 2 or more producer institutions. Producer institutions. Of course, if you are not able to get here the meaning of producer institutions, let us see whenever we come to the definitions part, that will help us much more on that. So, on the incorporation, who can do this? 10 or more individuals, 2 or more producer institutions. Private company, 2 or more individuals, company can form it. Incorporation is the first one. Of course, then name to end with. Okay, name ending. Name to end with producer company limited. Here everybody know it will end with private limited company. So ending name. Some of the differences what I thought I can quote. Next, management. There are some key differences in the management which I thought I can bring it to your knowledge. Okay, here it says on the directors part, okay, directors, minimum 5. We know here it is 2. Maximum here is 15. Here it is 12. Of course, everybody is aware that it can go up to 15 on obtaining the approval from central government. So, minimum 5, minimum 2, maximum 15, maximum 12, which can even go up to 15. Here, I draw your kind attention for a repeated question here. The producer company concept says, for the first year on which a producer company is incorporated, until the completion of the first year, the number of directors may be up to 18. Please, I draw your kind attention here. This is a repeated important case law question. Okay. Then you will be given a case study saying that a producer company has 18 directors. Is that valid? My dear friends, you are not supposed to stick verbatimly to this 15 and say no. During the first year, clearly it can have up to 18 directors. So I just want to draw your attention here and emphasize on the repeated case law question which we have in our examinations. Okay. Now coming to the next concepts like how many years the directors can be in the positions, all those things. Normally, we are aware, in the Companies Act, normally we have a concept of proportional representation, retirement by rotation and all those things. As a result of this, as far as a private company is concerned, there is no limit during which a person can act as a director. But we have some specific limits here. It says that a director can be appointed for a period of 1 to 5 years of time. We have some kind of concepts like this. So I want you to clearly understand these kind of restrictions. If additional director has to be appointed, those additional director should not exceed 1/5 of the total number of directors. So remember on the period, and then from there you can take the clue, this 1 to 5, you can take the clue as 1/5 of the total number of directors. And when a person is getting appointed as additional director or additional directors appointed, it cannot exceed 1/5 of the existing additional directors. Of course, as far as Companies Act is concerned, we don't have such kind of restrictions on that point is concerned. Now coming to the period of restriction, we have some restriction here. As far as Companies Act is concerned, we are very well aware any person appointed as an additional director as per the provisions of the Companies Act will hold office up to the conclusion of the next annual general meeting, wherein he may be appointed or his appointment may be confirmed by the shareholders, wherein an additional director will become a director. To differentiate, he becomes an ordinary director from an additional director. So that kind of concept is totally missing here. You don't have that kind of concepts over here. Now coming to the next interesting topic, general meetings. What is the rules regarding general meetings? Of course, everybody is aware of 166 of the Companies Act. What are the provisions on that? We are aware. Now let us take clue from that and see. First we will, as I said, we will look at what all we know first. Then from there we will come back to what we don't know. We have 21 days clear notice. Means excluding the date of the meeting and excluding the date of notice, there should be 21 days. 21 days clear notice. Here it prescribes for 14 days notice. Notice not less than 14 days. Okay. Here normally we have the first meeting within 18 months from the date of incorporation. Here it goes to say it has to be held within 90 days from the date of incorporation. Okay, let me repeat. Notice for general meetings. I request student to please adapt to the method of using the word general meeting instead of using the word annual general meeting, because a general meeting could even be an extraordinary general meeting. Normally, it would be better if you could use the word general meeting and get used to that and then write the same thing in your paper, because normally I could find students writing in their papers as annual general meeting, annual general meeting. It need not be an annual general meeting. It could be any other general meeting also. So let us practice the terminology of general meeting rather than the word annual general meeting. So 14 days notice for general meetings, 21 days clear notice. First general meeting has to be held within 90 days. It has to be held within 18 months. Okay, 18 months. That's how it goes. Of course, we are all aware that as far as private limited company or public limited company is concerned, attendance, quorum and all those aspects we have also studied. As far as producer company goes, it goes to say that 1/4 of the members forms the quorum. 1/4 of the members forms the quorum. And of course, I will let you know another important point here. As far as notice is concerned for general meeting, the notice should have the minutes of the previous meeting. Okay, some of the interesting concept. It should have the minutes of the previous meeting, and then it should go to say the name of the candidate who is standing for election, the person's qualification, all those things should be there. No such conditions we could see as far as this kind of ordinary companies is concerned. So these are all on the preliminary part on general meetings and other things which I thought I can bring it to your knowledge. Of course, there are other important differences which we will look at. Normally, we have been hearing the concept of equity share, preference shares, all those things. Okay. So as far as normal company is concerned, we have share in the form of equity, preference, both. Here they have only a concept of equity shares. They have a concept only of equity shares. Of course, you need to understand a new concept. There is a concept called active member here in case of producer company. Who is an active member? When we come to the definitions part, I will let you know. Just have the grammatical meaning of active member alone now. Of course, we understand that no such special rights is given to any other member. Nomination on the shares is mandatory as far as producer company is concerned. As far as this is concerned, it is a voluntary compliance. It's not a mandatory compliance. Okay. Now, next comes about loans and investments. Loans, investments. Provisions of the 372A is not applicable to a private company. So let us intercorporate borrowings and other things like borrowing of not less than 100% of the paid up share capital, free reserves, 60% of paid up share capital and free reserves, or 100% of reserves, whichever is higher. 372A we used to talk provisions as far as that. So as far as private company is concerned, no such concept of 372A is applicable. So what will be the provision as far as producer company is concerned on loans and investments? First point, loan can be given only on approval from members. Loan can be given only after approval from members in general meeting. Whereas we don't find any such provisions here because The scenario there is totally different. Okay. Just for our understanding, let us see what 372A says. 100% of free reserves or 60% of paid up share capital and free reserves. Example, whichever is higher, that goes to say. Having that concept in mind, here it goes to say 30% of paid up capital and free reserves. Okay, loans and investments can be made not exceeding 30% of paid up capital and free reserves. Taking that 60 divided by 2, we will have 30 is a clue to remember this one. Of course, coming to donation, normal companies are governed by the provisions of 293A, which I believe you are aware, not exceeding 5% of the profits, and story goes like that. As far as this is concerned, no contribution, no donation to political parties is permitted. That is very, very clear. Here it is a big no. No donation to any political parties. So these are some of the interesting stuff which will be of valid or vital differences between a producer company and a private company. Of course, this is not the end. We still have much more to go on this. Next comes on this topic will be like disputes. Okay, dispute. If there is a dispute, normally if there is a dispute, as far as companies are concerned, the dispute could go to CLB, Company Law Board. Whenever as and when NCLT comes to function, we will have NCLT over there. Now, as far as dispute is concerned, as far as producer company is concerned, the provisions of the Arbitration and Conciliation Act 1996 will apply. So, the provisions of the Arbitration and Conciliation Act 1996 will govern, and it will not be CLB as stated in other cases. So, these are some of the vital differences which I thought I can bring to your knowledge. So, starting from the beginning, you will find on the management, incorporation, then you will have on the director's part, share capital, loans, disputes. These are some of the vital differences to note between a producer company and a private limited company. Now, let us get into the key area of definitions part in producer company. As far as the definition part of producer company is concerned, I would suggest you to take up your material to go verbatim line by line to see what it is, because there are few definitions which are very unique to producer companies. If I could state the term which will be of confusing to people on the first reading, could be a concept called limited return. Any person who is listening the word limited return for the first time will come to an understanding that, okay, returns are limited, it seems so. In fact, the exact meaning for the term limited return is the maximum dividend. The maximum dividend is the term which is used as the term limited return. It means limited to that extent. So, these kind of some new terminology is present in producer companies. So, I want you to be very clear. Let us go by the definitions in the material to understand the few concepts and new terminologies which I have been talking to you for quite some time, like patronage, special rights, all those things. So, let us first look at, as usual, the producer company. As I said, producer company means a body corporate having objects or activities specified in the provisions and registered as a producer company under the Act. So, it does not say what a producer company is, but it says it is a company which is registered as per the provisions of 581 and all those things, having its objects as producer company. So, the first we will look at that one and then come back to active member. Active member who fulfills the quantum and part of patronage of a company, of a producer company, as required by the articles. Now, again, this is again a confusing part. What is this patronage? What is that he has to fulfill? Why he will be called as an active member? All those things. Now, looking at, again, let us go and resort to the definition of patronage. So, patronage means the person who uses the services that is offered by a producer company. In general, the definition goes like this. Patronage means use of services offered by producer company to its member by participation in its business activities. So, we understand any person who participates and avails the benefits, that activity is called patronage. So, any person who actively does this becomes an active member. Sometimes as a result of this active work, there is a bonus that is coming up which is called as patronage bonus. Patronage bonus are payments made by producer company, that is surplus being paid to its members. So, these are some of the new terminologies which I am just drawing your attention, which is a first time learning to us. Limited return means maximum dividend as may be specified in the articles. So, that is what I wanted to tell you. We are not supposed to interpret the term limited return as something return is limited. It is a maximum dividend which is stated over there. Interstate cooperative society, having a cooperative society having its present in one or more states, which includes a multi-state cooperative society, is the meaning that you are supposed to infer and understand. Rather than whatever given there may not be of that much interest to us, but the meaning is this one. Then what is a primary producer company? What is the primary produce? Produce of farmers arising from agriculture. If you could look at your material, will say agriculture includes horticulture, pisciculture, floriculture. It goes to say all those things. Let us understand the terminology with that concept and then see what it talks about. Produce of person engaged in handloom, handicrafts, all those things. So, these are all the concepts which comes under primary produce. Producer means any person engaged in any activity connected or related with primary produce. Producer institution means a company or other institution having producer or producer companies as its members. So, next you will have one more important definition is withheld price. Withheld price. The producer company is trying to distribute something, but it is trying to hold it back to distribute it later. It means, if I am looking at the definition part, it goes to say, withheld price means part of the price due, it is not full, part of the price due and payable for the goods supplied by any member to the producer company. It is part of the price due and payable which is withheld. So, these are all the definitions part. Let me once again repeat what are the definitions which we need to carry in mind. First one is the term producer company itself starts then with the first definition of active member. Then we have the limited return, interstate or multi-state cooperative society, then patronage, patronage bonus, primary produce, producer company, institution, withheld price. So, these are all the definitions part which we need to understand, because when we try to use this terminology on the later part, you should be comfortable in understanding this one. Now, let us go to the next stage of objects and formation. Objects and formation of a producer company. Objects and formation of a producer company. Let us look at the objects next. Let us look at the formation first, because I am always of an opinion, whatever I know clearly and much better, let us first have a better understanding of whatever we understood already. So, formation means, as we have already seen, any 10 or more individuals, 2 or more producer companies can form a producer company. They have to file the necessary applications with the registrar of companies, who will, if all terms and conditions are getting satisfied, within a period of 30 days issue a certificate that the company is registered. So, this is on the registration part. How it is being registered? 10 or more, 2 or more, join together, file an application with the registrar of companies. Within 30 days, registrar issues certificate. What all it will have? It will have memorandum, it will have articles of association. The memorandum and articles should be filed with the registrar of companies in which it is located, the state in which the producer company is located. These are the terminologies which we already knew as far as Companies Act is concerned. So, I am just talking to you on the same lines, so that this can be, we will just re-understand whatever we have understood. Then we will come back to the objects clause. Objects and formation. So, we have seen how formation is. This is how this is formed. What is the objects? If you could look at our material, we will see that the objects of a producer company may be relating to all or any of the following, like producing, harvesting, procurement, handling, marketing of primary produce, processing including preserving, drying, distilling, brewing, it goes like this. Providing education and mutual assistance principle to its members and others. You may have a case law on this, because this is outside the purview what majority of the students will think. No. Providing education and mutual assistance principles to its members and others. Manufacture, sale, supply of machine, equipment, consumables mainly to its members. Rendering technical services, consultancy services, all those things. Promoting techniques of mutuality and mutual assistance. These could be the objects. All or any of this is what we have seen. So, these are all the sum of the objects on or for the purpose of which a producer company may be formed. So, formation, I told you, these are the objects clause. Now, apart from this, what will be the effect of incorporation of a producer company? Effect. Before a producer company is formed, if it is existing as a cooperative society, the members who are all on there will become the shareholders after the producer company has been incorporated. In this case, it is worth to understand the membership and voting rights of members. Okay, membership and voting rights. Membership and voting rights, because this is something new which we need to look and have a keen study and understand here. What will be the position in case of the members? What will be their voting rights? How is it individually? How is it in case of companies, one or more producer companies? What will be their voting rights and all those things? In case where the member consists solely of individual members, it means in a producer company where there are only individual members, the voting right will be based on one vote for one member, okay, irrespective of the shareholding or patronage of the producer company. Let me repeat, if you have a producer company which has only individual members, it will be on one member, one vote basis. In case member consists of only producer institutions alone, the voting rights shall be determined on the basis of their participation in the business of the producer company, or as may be specified in the articles from time to time. Okay. In the case of member consists of both individual as well as producer institutions, it will be a single vote for every member, and producer company may have as per the articles however it may be. So, this is how it goes on this. So, you will have an idea of only one members, only producer companies, individual member as well as producer companies. So, what will be the benefits of the members? Of course, the members can enjoy all the rights, they can attend, they can vote, of course, their liability is restricted to the capital, whatever they have contributed, all those things. Next comes important question, Memorandum of Association of Producer Company. I am drawing your attention here. It is much important than what we have been talking recently. Memorandum. Whatever we knew from the Companies Act, we will try to correlate it and read it over here. Let us try to correlate with the Companies Act and then have an understanding first. Then we will see the new or the exceptional points under producer companies. Let us take memorandum of a producer company. First, we will go with name clause. This is all similar what we see normally in the Companies Act, name clause, object clause, okay, situation clause, okay, liability clause. Normally we see on the Companies Act all these things, okay, capital. These are some of the things. Let us try to fit producer company to this. and then see the difference. Name of the company will end with Producer Company Limited. Producer Company Limited. Okay. Objects clause, we have just now read out what all could be the objects. Okay, what all could be the objects we have just read out. It could be one or more of the objects specified as per 581B. Of course, that if you are able to remember it, or else it is not a big task. Then it will have the name and address of the people who have subscribed. That is, name and address of the person who has subscribed to this. Name and address of the person who has subscribed to the memorandum. Then the person who are subscribed first will be called as our own terminology, first director. We already know this concept of first director, so it will be first director. Opposite to their name will be the number of shares whatever they have taken. How many shares each person has taken. Then liability will say that the liability is limited. Situation clause will say where it is situated, the state in which this is situated. These are the general things whatever we have seen. So we know this clause, we have just fitted it to the producer company and we are just rereading whatever we know. Nothing big deal on this. And as far as share capital, it is what is the share capital that is registered. We will have all those things. So memorandum of a producer company correlated with that of a Companies Act. Write down first what all clauses you know, then fit into it everything. So reading will be much easier. I am just suggesting this because you need not reread whatever you have already know very well. Name clause, subject clause, situation clause, liability clause, capital clause, simple as that. Next, coming to the biggest and lengthiest concept, Articles of Association. The Articles of Association of a producer company is bit lengthy as far as contents in your material is concerned. The first question which comes to the mind of a student is, should we by heart all those things? My answer is no. You don't have any necessity to by heart every point that is given in the Articles of Association. But just as we know from the Companies Act, read it or recollect whatever you know from the Companies Act and then try to apply this. First, what it will say? Qualifications for the member, voting rights. These are some of the concepts which we even find there. Election of office bearers. So then how the patronage can be distributed. Okay. How allotment of shares can be made. How loans and advances, if any, can be made. These are all some of the aspects which I am just giving you an insight based on the Articles of Association of a company. So just take or recollect that concept, put it over here and then write it, changing the words suiting to a producer company. Very well we are aware after reading the differences. Loan can be given to members only after getting approval from members in the general meeting. So you can very well put those clauses into here and say as though you know it very much. Your flow in paper should go like this. I am just suggesting. So if somebody is asking Articles of Association of a producer company, you should not blink and think that it has something absolutely entirely different from the Articles of Association of the Companies Act. No. Take clue from that, include whatever are applicable for a producer company and then write the contents. You will really have rich contents to write in your paper. So just don't get immediately upset looking at, oh, I did not read the producer company Articles of Association. It is same as what you have read. Just change few points then and there, you will have the whole thing coming out. I am again repeating, there is no necessity for you to read all the clauses mentioned in your study material for Articles of Association. There is no need to by heart that. Okay. So with this, we will go to the next one, amendment. How amendment to memorandum can be done? Memorandum of Association, Articles of Association, how memorandum amendment can be done? On the amendment in Memorandum of Association of a producer company, there are some important points which I thought I can share it with you and correlate it with that of a company that is normally existing on this. It goes like this. Of course, any Memorandum of Association cannot alter the objects clause which is against the objects that is prescribed under 581B. because 581B we just saw recently what will be the object clause, like a producer company, what all it can do. It cannot be against that one. Any other amendment to the object clause which is not against 581B is permitted. So, the clue word for you to remember is 581B, because anything against that is not permitted. Other than that, amendment is permitted. So, any amendment, okay, if it is certified by 2 directors, it can be filed with the appropriate authorities, and then the amendment can take effect. Of course, the registrar will take that into account. It should be filed within 30 days. All those provisions goes like that. So, coming to amendment of articles, who can request for amendment, how it can be done, because we have a concept like special resolution, ordinary resolution, all those things. What will be the thing in this? Okay, amendment as far as articles of association is concerned should be proposed by not less than 2/3 of the elected directors proposing the amendment. Okay, not less than 2/3 of elected directors, or by not less than 1/3 of the members of the producer company. Okay, and it should be adopted by the members by a special resolution. Copy of that should be filed with registrar within 30 days from the date on which that it is passed. So, these are all something on the amendment portion, how it is. 2 directors filed within 30 days, remember that concept. You will very clearly write in your examination. That clue is enough for you to remember in this case. Now, let us look at concept like how an interstate cooperative society, that is interstate cooperative society includes a cooperative society which has presence in 1 or more states, which includes a multi-state cooperative society, whatever I have talked to you earlier. I am just putting that verbatim here so that you will be able to recollect that one whenever I am talking about that one here. So, conversion from cooperative society to a producer company. So, how that can be done? As usual, a special resolution should be passed, not less than 2/3 of the members of the interstate cooperative society for its incorporation. Then it should show who are all the office bearers, like if there are some other people who are at the helm of affairs, like chief executive, directors, whatever name they are called. Then the list of members, then it should be indicating all these things, and declaration by 2 or more directors that it is engaged in like this kind of activity, whatever information we are furnishing is correct, all those things should be given over there. Once all these kind of papers are submitted on complying with these kind of requirements, a interstate cooperative society can become a producer company. Now, there will be other questions. What will be the concept when this conversion takes place? Remember the provisions, whatever you studied till date in various aspects like amalgamation, merger, takeover, acquisition. We have studied all these concepts. It is verbatim of all those concepts. No new reading, please. Let us not waste our time and energy to feel whatever we are reading here is something new. Whatever we are seeing here has already been studied by us under a different context. Here we are just re-looking that from a different perspective, that's all. It goes like this. All assets and liabilities as on the date of conversion will become the assets and liabilities of the new entity. All members will become members. Okay. All liabilities will become all this liability. It goes like this. All assets will be transferred, or cases will be transferred, or members will be transferred. There is one line which normally as people of finance you will look forward in your life. Whenever we type in any agreement, we will write, for example, ABC Company Limited having its registered office at so and so place, within bracket, hereinafter referred to as company, okay, then close the bracket, then you will write includes, successors, assigns, all those things. So, the word successors, assigns means whoever or however it is being taken over. So, whenever this kind of conversion takes place, all assets will vest, all members, all this kind of activities will get transferred. So, that is what vesting of the undertaking in producer company. That is how the story goes like this. Then, what will be the aspects as far as management is concerned? We will look at, again, we have looked at the concept of management only from the concept of difference between Now we will look at the concepts management directly. Management. In management, the first to come is number of directors. Number of directors. I will repeat whatever we have seen already. Okay, we have seen there, but we will still again repeat. Okay, 5, maximum 15, first year 18. Okay, the minimum number of directors which it will have is 5 directors, and the maximum will be not more than 15 directors. Of course, for the first year in which it is incorporated, it can have more than 15. It can have more than 15 for the particular case. I am just writing this one to recollect you to make the repeated question in our exams, which normally asks there are 18 directors during that conversion. Can that be okay? It is very much allowed, because I am taking clue from that to extend to make your knowledge very clear. You will remember that case law question whenever you see this. First year more than 15 is allowed. Simple logic. So 5, maximum 15. So appointment of directors, any person who signs that will become the first directors, and the first general meeting will be held within 90 days, as you are aware, and that election of directors shall be conducted within that 90 days and they will be appointed. As we have already seen, the period of appointment here is totally different as what we have seen. It is something, it ranges for that 1 year to 5 years, and not as we see in the Companies Act in general, proportional representation, retirement by rotation, those kinds of concepts. It is totally different whatever we see here. Then next comes vacation of office. Vacation of office. I believe I have talked when I was talking to you on various other concepts on the erstwhile chapters. Whenever there is something being talked about disqualification, you are supposed to remember 274 of Companies Act. 274 of the Companies Act talks about disqualification of directors. It goes to say no person shall hold the office as director if A, B, C, D, E, F, G. 1, that is clause A, has been sentenced to imprisonment for a period not exceeding 6 months, and a period of 5 years has not elapsed. Story goes like this. Then is a person who has been adjudged as insolvent, who has applied to be insolvent, okay, all those stories and stuff. So remember this 274 and then come and put it over here. Has convicted by a court of an offence involving moral turpitude and sentenced to imprisonment for a period of not less than 6 months. Same clause. Then recently the 274, recently in the sense around 2000, director's responsibility statement will go that I have complied with all the provisions, all forms and returns has been filed, all deposits have been paid. These kind of declarations are there. So that will verbatimly apply here. All deposits, everything, if it is due, has been paid, nothing is unpaid. The company in which I am a director has complied with all the provisions. It has filed all annual returns for the past 3 financial years, commencing from the 1st April 2002. It all goes verbatim. Whatever is there in that, just take and then put it over here. Don't read something new or don't get afraid something new is there in producer company. All concept verbatim with minor changes. What will be the liability of directors? If there is some specific mistakes which is committed and they could be held responsible specifically for that, it will be limited to that particular error or the volume or the money involvement or whatever it is to that particular case. Their liability will extend to that case. For example, some loss has occurred as a result of contravention of the law. Then it will go to that extent. To that extent, their liability will be extended. So these are the concept on liability of directors. What about the concept about committee? Because Companies Act we have studied about audit committee, remuneration committee, okay, share transfer committee, that is investor grievance committee. There are a lot of committees. What about committee here? Yes, we have committees here also. Committees here talks about assigning of activities by the board to a committee which will actually take care of that. Of course, the chief executive cannot delegate his power to the committee. That is, chief executive cannot by way of a resolution say that I am assigning my powers and rights to the committee. That can never happen. Activities of the organization can be entrusted to a committee where the committee can work upon it and then report to the board, and the board will take necessary action on this. So, delegation of powers to committee is still present. The fees and allowances that is paid for general meetings of the board of directors, general meetings I mean to say normal meetings of the board of directors, will be paid to the committee meeting and they are sitting and all those aspects. That story goes like this. Then coming about meeting of the board, then we will have quorum also, quorum. So, meeting as usual, one meeting in every 3 months and at least 4 meetings in a year. This is how the general concept is. What will be the quorum, what will be the notice procedure, all those things. Notice, clearly there is an indication that notice, 7 days notice. 7 days notice should be given. If you look at the exact term, it says that not less than 7 days prior to the date of the meeting. So, goes like this. Of course, sometimes shorter notice is also permitted if all the members agree to that. The quorum for the meeting shall be 1/3 of the total strength of directors. The total quorum for the meeting will be 1/3 of the total strength of directors, subject to a minimum of 3. That is also to be taken care. Okay. So, 1/3 or 3, whichever we will have that, we will take the benefits of that. Then what will be the functions of a person called chief executive? Normally, what are the powers that will be normally entrusted with the managing director of a company? We could find similar lines: doing administrative activities, maintaining the proper books of accounts, working as per the memorandum and articles, okay, act in accordance with the directions of the board and execute the activities of the board, assisting the board members in formulating the goals, achieving the objects of the company. All these things will come as per the role of a chief executive. So, my point here is, my dear friends, there is nothing to learn new. There is nothing for you to see that what is the provision here, what is that I have to learn new. Everything is present elsewhere. Just change a few terminologies, all the points are there with you. Next comes company secretary appointment. Is it mandatory? Act goes to say, any producer company which has a turnover of 5 crores for the past 3 years will have to appoint a company secretary. Okay. It is not paid up share capital. It is average annual turnover 5 crore. Turnover 5 crore. For the past 3 financial years will have a whole-time director. The best word could be shall have a whole-time director. Of course, it can take all necessary steps to appoint a director. If appointing of a company secretary is beyond its limit, then it has to give explanation that the financial position of the producer company is not that it can appoint a company secretary. Those explanations can be given if it is not in a position to do so. So, having talked about company secretary, next we will talk about aspects like audit. Audit should be conducted. Internal audit, it should be conducted. Statutory audit should be conducted. So, all these things happens. Coming about general meetings. General meetings, again the list is a very big exhaustive list. Approval of budgets, okay, approval of patronage bonus, issuing of bonus shares, all these things decisions vest with the general body meetings. Quorum for this will be 1/4 of the total number of members, 1/4 of the total number of members. Directors meeting 1/3, members meeting 1/4. Every member can vote. Whoever has voting rights can vote. Annual general meeting should be held once in a year. The gap between one meeting to another meeting should not be more than 15 months. First meeting should be held within a period of 90 days. These are all some of the repeated points which I am just repeating whatever we have seen earlier. Minutes of the previous meeting should be placed in the next AGM meeting. All those things goes. And in the beginning when I was talking to you about the difference, I was talking about the director's qualifications etc. should be mentioned. All those things goes here without saying. So the agenda should be there, previous meeting minutes should be there, name of the candidate along with their qualifications should also be there. Everything is the requirements. Coming about other aspects, like what are we left, could be like something like the share capital and other parts. For example, share capital. Okay. On the share capital part, it shall consist only of equity shares. It will consist of only of equity shares. Special user rights is what we have seen. They have special rights. Producer company may issue appropriate instruments to meet their requirements as special rights, that based upon the activities of the member, they get that special privilege. What is the provision as far as transfer of shares? I was talking to you about section 313 of the Companies Act, restricting rights to transfer the shares, limit the number of members to 50, all those provisions of private limited company. I was just talking to you on the initial discussion. What will be the provisions on the transfer of shares as far as producer company is concerned? The point goes like this. The producer company, the shareholder who has the shares may, with the prior approval of the board, transfer the shares along with special rights to an active member at a par value. In case the person is no more, then actually I was talking to you on the difference that the nomination is mandatory. When I was talking to you about the difference between producer company versus a private company, I said private limited company and other general companies, the nomination is just voluntary, but as far as producer company is concerned, it's mandatory. As a result of that mandatory provision, the nomination will be registered in respect of the person after his death who has to hold the shares. Automatically, on the death of that member, the shares will vest on the nominated person. And if that nominated person is again an individual who is in line with the activities being carried on, he will continue to hold. If not, if it is some other person, then the board can decide how to go about it. They may even go to the extent of requesting that person to surrender the shares to the producer company, if the person happens to be a person doing some other activity which is nowhere related to a producer company. So the board has powers to this extent. So there are provisions like this. One, it can be transferred provided as per the board gives approval when the person is alive. When the person is no more alive, since there is a nomination existed, the shares will automatically dwell on the nominated person. If the nominated person is continuing with the similar activities, shares will be with him. If he is having some other activity, then the board can even go to the extent of asking him to surrender the shares. Coming to the next aspects like finance accounts, as I said, of course, finance accounts, books of accounts has to be maintained, audit has to be conducted. Normally, as per what we have seen in 209, to whatever books of accounts will be maintained, books of accounts shall be maintained related to the purchases and sale made, the assets and liabilities that is existing, okay, assets, instruments and other aspects, all those things. As usual, 209, some of the provisions will be there. Of course, internal audit, to some extent we feel that the internal audit is mandatory here, and the auditor shall give his report with all his findings as that goes on. Then as regards aspect like in general, if you are looking at what will be the provisions as regards amalgamation, I have already spoken to you. Whenever there is an amalgamation, merger or division taking place, it will delve on the new company that has been there, all assets and liabilities getting transferred and all those things. I am just repeating to one more point which I have been talking to you initially on the difference between producer company and a private company. Difference of opinion or settling of disputes. I said if there is a difference of opinion or dispute, it has to be settled in accordance with the Arbitration and Conciliation Act 1996 as per the provisions contained over therein. Okay? If there is a difference between the members and all those activities, to whom will the dispute be referred? Whether it will be directly referred to any other forum, whether company law board will take care of this, whether it will go to High Court, what is the provisions? It will be settled in accordance with the Arbitration and Conciliation Act 1996. So, that is very clear on this. Coming to the tail end portion of this, striking of the name of the company, as what we see in 560 and other aspects of the Companies Act. The registrar, on being satisfied that the affairs of the company is not being conducted, or if he is satisfied that after making necessary inquiry that the producer company is not carrying on its objects even after 1 year after incorporation, he may forthwith send a notice asking that why the company should not be dissolved. So, on that basis he can proceed to strike off the name of the producer company. Then coming to the tail end portion, reconversion of a producer company into an interstate cooperative society. Of course, that is permitted after passing a resolution in the general meeting by not less than 2/3 of the members present, and on all or otherwise by request by its creditors on making application and necessary aspects, it can also be done. So, with all these aspects, we just try to see that the provisions of the producer company is similar in majority of the aspects to a private company, but with then and there special clauses applicable, special points that are specifically applicable for producer companies in order to retain the character of the cooperative society, to enable the cooperative society to take the advantage of a company and then work and reach the rural mass, so that the economy can benefit by way of a corporate approach to a cooperative society. Now, having talked about all these things, let me try to once again recapitulate from the beginning whatever we have seen, so that it will be easier for you to read and then keep it in mind whatever we have seen. We started with the background. The government wanted to improve the cooperative societies and other things, so a committee was formed. Let us now in this discussion of just recollecting, leave out the very technical aspects, dates specifically. It was formed in 1999, then the committee gave its report in 2000, then the Finance Amendment Act had it when the Companies Amendment Act 2002 was passed. Okay, then coming it had there are 12 chapters under producer company, starting from section 581A to 581ZT, just for our easy remembrance. Then we find that the majority of the provisions are similar to producer companies. There are various differences, like even from incorporation, management, general meetings, share capital, loans, investments, all those aspects, even disputes, there is a difference. So, these are some of the points which you have seen. Then we have been talking about definition part, like limited return, okay, withheld price, producer company, okay. Then chief executive, of course, these are some of the things which we can learn and understand. Interstate cooperative society, patronage bonus, active member. So, some of the points like this which we will recollect on the definition part. Then we have been looking about the objects of a producer company and formation, filing of application within 30 days, registrar of companies gives an approval. Then about the members and their voting rights. Then we have been looking at the memorandum. What are the clauses that will be there in the memorandum of a producer company? What will be the provisions in articles of association? What will be the situation in case of amendment of memorandum and articles? What are the procedure to be followed? What cannot be altered? What cannot be amended? Okay, then provisions about interstate cooperative society on its getting converted to a producer company. What all things will vest with the new company? The number of directors, minimum, maximum, appointment of directors, vacation of office by directors, the liabilities of them, and the powers and functions of the board. So, then concepts about the committee of directors, committee of delegation of powers of the board to the committee to make the committee to execute it. Then the meetings of the board and the quorum on that. What is the provision on appointment of company secretary? Then the general meetings, matters to be transacted in the general meetings, frequency of general meetings, duration of the first meeting within 90 days, then subsequent meeting, one meeting in every year, gap between two meetings should not exceed 15 months, all those things, as usual accounts and audit and other things. So, these are all in general the provisions what we have seen. Ends last with the resolution of disputes and of course, striking of the name of the company, registrar can do that, and reconversion of a producer company into an interstate cooperative society. So, these are all on the general part, whatever we have seen. Again, I am repeating, whatever you have studied under the Companies Act is still prevalent over here, and don't feel that you have to read something new. Just apply few of the concepts, you will be able to make it out with this. Let me take up the next concept of the repeated questions on the examinations from the producer companies. On the repeated questions on the examinations from the producer companies, I thought it would be worthwhile to share with you some of the few questions which are repeatedly asked in our examinations, so that you will be able to make it up straight away with the correct answers for it. Looking at some of the repeated important question, I will make it up like this. One of the question in a recent examination goes to read like this: an interstate cooperative society has been incorporated, they have given a date, as producer company under provisions of Companies Act. Give your comments on proposal to have 18 directors on its board after incorporation. That is why you remember I wrote 18 when I was talking to you. Okay. So 581 says that producer company cannot have more than 15 directors. However, for the first year, it may have more than 15 directors. It is valid, but that exceeding 15 directors cannot be for the subsequent year. It is only for the first year. Next important question, next recent question. A producer company wants to issue bonus shares. What are the relevant provisions on this? Upon recommendation of the board and passing of the resolution in the general meeting, bonus shares can be issued. It will be in proportion to the shares held by the members. Okay. So, don't be afraid to look at questions like this. What are the modes of investment from and out of general reserve available to a producer company? Very good question, which we have not covered in our discussion. What are all the modes in which investment can be made by a producer company? If you look at the act, it goes to say very safe investment. It talks about fixed assets, investment in securities of the government, which could be contributing fixed deposits wherein returns are safe. It talks about investments like this. So, for your easy understanding, let us look at that provision and see how it goes. In approved securities, fixed deposit, units and bonds of central government, any other scheduled bank, okay, securities under section 20 of the Indian Trust Act, shares, securities, assets of public financial institutions under section 4A. So, the rule goes like this. This is another important concept which we have not covered in the discussion part, but take care, on which investments can be made out of general reserves by the producer company. Okay, if you are looking at the next important question, I could suggest question like this. Under 581 ZK of Companies Act, the board of producer company, how they can make for donations or how they can go for intercompany loans, how is that permitted, is what is the next question which we will be looking at. In that case, it goes to say, a producer company has received application from one, a director, and another person, a member, for grant of loan. Is this permissible? So, it goes to say that loans and advances against security as provided in the Articles of Association is allowed, provided the repayable period shall be from period of 3 months, okay, but not exceeding 7 years from the date of disbursement. And the limits and other things the company can decide only after the approval in the general meeting. So, when somebody approaches for the loan, whether the loans can be given. Of course, loans can be given for a period exceeding 3 months, not exceeding 7 years from the date of disbursement. The limit and the value of loan, etc., will be decided or will be subject to the approval of the members in general meeting. So, these are all some of the points which I have not covered in our discussion. So, I thought I can handle it by way of a repeated question or examination. Now, a 2-year-old, next question, a 2-year-old producer company registered wanted to donate some amount. The chief executive approaches you. What will be the provisions in this regard? So, if you could look at whatever we have seen earlier, you will be able to clearly recollect and say what I have been comparing with vis-a-vis 293A and then I was talking to you about. For example, it goes like this as far as producer company is concerned. Donations are allowed. Of course, subscription in any financial year shall not exceed 3% of the net profit of the producer company in the financial year immediately preceding the financial year in which the donation. So, okay, the last year of the profit, it can go up to the 3% on the net profit on the previous financial year. You will have some quoting like last year profit is this much. Okay, can the donation be made? Of course, you have to compute. For example, last year profit is 20 lakhs. What will be the donation parameter? You can just write since 3% is allowed on 20 lakhs, it can make a donation of up to 60,000 this year. So, your answers could be on this type. You will have again questions relating to company secretary. There is a frequent question on that I could find. Producer company having an average turnover exceeding 5 crore in 3 consecutive financial years shall have a whole time company secretary who is a member of the Institute of Company Secretaries of India. So, these are some of the points which I thought I can share by way of the previous year questions, so that you will be able to understand things much better. As far as investment is concerned, it should be made in fixed deposit, secured, approved securities, all those things. As far as donation is concerned, up to 3% on the net profit of the company. So, these are some of the aspects which you will have some practical questions in our examinations. So, I have just covered the frequent repeated important question. Other than that, you will get various questions on whatever topic we have discussed right from the beginning, like memorandum, application, registrars, power to strike over the name, all those things. You will have a potential opportunity of questions from any of the area. I will not restrict any particular area in this producer company and say that you will be getting question only from this part or that part. You will get questions from this end to that end. As we have seen that it is wide open, because you will have some new provisions which will be contradicting with the provisions of the Companies Act. There you have a potential chance for the question to come, because students may write the provisions of the existing Companies Act without having a relevant knowledge on the producer company. So, try to concentrate on that kind of area more and then read, so that you will be able to give the best out of this. So, since we have also done a recapitulation of everything, we have just seen all the previous repeated important questions. So, there with this we end the concept on producer companies. Wish you a happy learning, my dear friends. Wish you good luck. Thank you.